In part 1 of my lecture series about the accounting cycle, we learned that the preparation of financial statements comes after the preparation of the adjusted trial balance. From that, it is apparent or obvious that financial statements preparation may be based on the adjusted trial balance. However, it is also possible to prepare the financial statements using the 10-column worksheet, specifically the last 4 money columns. And that is what I'm going to show you in this episode of my series on the preparation of financial statements of a merchandising business. Aside from the 10-column worksheet of Golden Memories Music Accessories for the year ended December 31, 2020, there is additional information, however, which we would need to consider later on. This is the worksheet of the business, at least part of the worksheet. As you can see here, I have intentionally hidden the first 4 money columns for better viewing of this presentation. Keeping in mind the line items in the statement of comprehensive income, or in this case, the income statement, as well as the statement of changes in equity and the statement of financial position, which I hope you now already know by heart, better to go through the account names on this worksheet so we can already set up the financial statements with the proper line items. For the income statement, we must of course have the net sales, the cost of sales, and the resulting gross profit. How about other income? Should we have that as a line item? Yes, because there is interest income here. How about the expenses? Distribution cost, administrative expenses, finance cost, and other expenses. Just by noticing this freight out, we must know there is distribution cost. And remember the additional information we encountered before? From that, we know that aside from distribution cost, there must be administrative expenses in the income statement. And finance cost also, because of this interest expense. Are there expenses which should be classified as other expenses? None. So no line item for other expenses in the income statement. There is net income, not net loss. So we can already prepare a partial functional form income statement with the proper heading, the line items, the note numbers, as well as a bar or line after each anticipated mathematical operation. Net sales less cost of sales. So we need a bar or a line here. Equals gross profit. Then add other income. So another bar under the anticipated amount of other income. The 3 expense amounts here later will be added. That means another mathematical operation. So another bar under the last expense amount. Then total expenses to be placed here will be deducted from the amount of total income. Therefore, we need another bar or line here. Got that? So you must know where to properly write the bars after each mathematical operation. And not to forget, For the net income amount, since that is the last line item, double rule. How about for the statement of changes in equity? Money low capital here. There is no information about the amount of additional investment. So we have to assume that this entire amount of capital is the capital at the beginning. There is likewise the drawing account. And remember, the net income, not net loss. So those three accounts, capital beginning, drawings, and net income, will make possible the computation of the capital end in the statement of changes in equity. Let's make it statement of changes in owner's equity. Because Golden Memories is a sole proprietorship business having only one owner, which we can glean from the worksheet where there is only one capital account. Then the bar, after unexpected addition and subtraction. Then for the amount of the last line item, the capital at the end, double rule. Let's determine this time the line items in the statement of financial position. There must be a line item for cash, or as you will learn in intermediate accounting, for cash and cash equivalents. But since in this problem, there are no cash equivalents, so our caption is only cash, not cash and cash equivalents. There must also be trade and other receivables. Also merchandise inventory and prepaid expenses. Immediately after the last current asset, prepaid insurance is a non-current asset, delivery vehicle, which must be shown as part of the line item property, plant, and equipment. Therefore, there should be no trading securities under the current asset section of the statement of financial position. We also need trade and other payables because of these accounts payable and notes payable, but no non-current liabilities. None. And needless to say, we also need in the statement of financial position the ending balance of money low capital. Knowing the necessary line items, we can now prepare a partial statement of financial position. Let's do a report form. That is, the assets are shown above the liabilities and equity, in contradistinction to the account form, where assets are presented on the left side while the liabilities and equity are shown on the right. Let's prepare two money columns to show the total of the current assets later on the second one. Likewise, let's ready the notes to financial statements. Now, it's time to write the amounts on their appropriate place in the financial statements. The income statement should be prepared first. So let's concentrate on these income statement columns of the worksheet. First amount, 455,000. Merchandise inventory. Is this beginning or end? Beginning. Forward to note number 2. Next, this one, 4,100,000 sales. Forward to note 1. Then, sales returns and allowances. Then, sales discounts. 40,000 plus 10,500 equals 50,500. Deduct this amount from 4,100,000 to get the net sales amounting to 4,049,500. This amount now must be forwarded to the income statement. Next, purchases of 350,000. Forward to note number 2. $15,000 freight in. 350,000 plus 15,000 equals 365,000 cost of goods delivered. Purchase returns and allowances, 17,500. Next, 6,500 purchase discounts. The sum of these two figures to be deducted from the cost of goods delivered of 365,000 to get the net purchases of 341,000. 341,000 net purchases add to the merchandise inventory beginning of 455,000 equals cost of goods available for sale of 796,000. Next, freight out is part of distribution cost. Where else are the distribution costs? Oh, remember the additional information before? Rent expense, 60% for store space, 40% for office. Salaries expense, 60% for store personnel, 40% for office employees. Supplies expense, 30% for store, 70% for office. The insurance expense is for the delivery vehicle. Therefore, 60% of this rent expense is part of distribution cost. Likewise, 60% also of this 1.8 million pesos worth of salaries expense is distribution cost. Count gas and oil expense in, together with 30% of this supplies expense. Depreciation expense of delivery vehicle, as well as that of store furniture and equipment, are also considered as distribution cost. What else? How about this insurance expense? Insurance expense is for the delivery vehicle. Because the delivery vehicle is used in the selling function, the insurance expense is also a distribution cost. Any other expense directly related to selling? Nothing more. It's time to forward now each of the distribution costs to note 4 of the notes to financial statements. Highest first. This one, 1,080,000 salaries expense. Then, 432,000 rent expense. Followed by 270,000 gas and oil expense. Depreciation expense of delivery vehicle. 20,900 freight out. 14,583 depreciation expense of store furniture and equipment. Next, 6,750 supplies expense. And lastly, 4,125 insurance expense. Total distribution cost, 1,908,358 to be forwarded to the income statement. Let's look for the administrative expenses now. As per the additional information we came across before, 40% of the rent expense is for the office space and therefore is part of administrative expenses. By the way, please be reminded that I show computations here on the worksheet and make yellow and red markings for the purpose of illustration only. You should not do that on your own worksheet when preparing financial statements. Let's continue. Salaries expense, 40% also pertains to administrative expenses. 40% of 1,800,000. Okay? Not 40% of 1,080,000. But 40% of this total salaries expense amounting to 1,800,000 equals 720,000. What else? Supplies expense. 70% of 22,500 was used in the office and hence also an administrative expense. This one is administrative as well. And so is doubtful accounts expense because the problem is silent as to who grants credit to customers and is in charge of receivables collection. Highest administrative expense is 720,000 salaries expense. Forward now to the notes financial statements. Followed by 288,000 rent expense. Then, depreciation expense, office furniture and equipment. $15,750 supplies expense. And doubtful accounts expense. For a total of 1,045,830. This amount must then be forwarded to the income statement. Next, we're still on the income statement columns of the worksheet. This one, interest expense, is finance cost, right? Forward also to the income statement. Then we can already add these three expenses. Because this total amount of expenses would later be deducted from the total income here, to emphasize deduction, we may write open close parentheses or the word less plus the colon symbol here before the caption expenses. Not writing the parentheses or the word less, however, is acceptable anyway. The important thing is you must know that these total expenses must be deducted from the total income. What's next after interest expense? Interest income of 9,375. This is classified as other income in note number 3. Is there any other income which we can categorize as other income? Nothing more. So, double rule. This 9,375. And then, forward to the income statement. Any other amount under the income statement columns of the worksheet? This pertains to income summary, which is representative of this merchandise inventory end for income statement purpose. Hence, this should complete our note number. Merchandise inventory end of 245,000 deducted from the cost of goods available for sale of 796,000 would give us cost of sales of 551,000, which must appear in the income statement. And deducted from the net sales to get the gross profit of 3,498,500. Add other income of 9,375 equals total income of 3,507,875. And then deduct the total expenses of 2,998,250 equals 509,625 net income. And that completes the income statement of Golden Memories Music Accessories. Take note, this net income of 509,625 is the very same one we can find in the 10-column worksheet, and which we have to carry forward to the statement of changes in owner's equity. Going back to the worksheet, this time let's focus on the statement of financial position columns. Cash of 250,000, which should be the first line item in the statement of financial position. The next three accounts here, accounts receivable, allowance for doubtful accounts, and notes receivable, to note number 7, trade and other receivables. $475,000 accounts receivable less allowance for doubtful accounts of 45,000 equals net realizable value of 430,000. Is there any other account which should be part of trade and other receivables? interest receivable of 1,125. That's the last composition of trade and other receivables. Total now. This 481,125 must then be forwarded to the statement of financial position. Next, prepaid insurance. To note number 8. Any other prepaid expense? This office supplies is a prepaid expense. That's it. Nothing more. Total prepaid expense, 14,625 to the statement of financial position. After prepaid insurance, we have the property, plant, and equipment accounts, including the accumulated depreciations. Let's copy these accounts and amounts for our note number 9. Now, let's get the net book value or carrying value of each fixed asset. Then the total to be forwarded to the statement of financial position. Please take note, this 1,728,337 is written not on this first money column, but immediately on the second money column, unlike the amount of each of these current asset captions, because this property, plant, and equipment is the only line item under non-current assets. Back to the worksheet. Next in line is accounts payable, followed by notes payable, both of which should form part of trade and other payables. Any other account or accounts to be categorized as trade and other payables? Salaries payable, 150,000. Rent payable, 60,000. Interest payable, 6,562. Additions to note number 10. Total, 1,691,562. Again, to be brought forward to the statement of financial position. After notes payable are money low capital beginning and money low drawings to be placed on the statement of changes in owner's equity. Money low capital beginning of 552,900, add net income of 509,625 equals 1,062,525. Since this drawing of 35,000 is to be deducted from the subtotal, better write open close parenthesis again for consistency. Money low capital at the end, 1,027,525. This amount must now be brought forward to the statement of financial position, which would result to total liabilities and owner's equity of 2,719,087. Back to the worksheet, what else haven't we taken into consideration? This 245,000 pesos worth of merchandise inventory end, which must appear in the current assets section of the statement of financial position. When all these amounts are added, we get total current assets of 990,750. When added to the total non-current assets, would give us total assets of 2,719,087, which is equal to the total liabilities and owner's equity we arrived at earlier. And with that, we have finished preparing Golden Memory's income statement, statement of changes in owner's equity, statement of financial position, and notes to financial statements. At least partial notes to financial statements. Because as you probably already know by now, notes to financial statements in the real business world should include a summary of significant accounting policies and other explanatory notes. And we do not have those now for classroom purposes for lack of information. Have a blessed day. Thank you.